And if you keep asking questions like that of reality, starting at a young age, you gradually learn. And Warren, you were doing the same thing. If you take the rulers of the businesses when I was a little boy, an awful lot of those businesses in Omaha, a lot of those businesses went broke. A lot of them sold out at modest prices under distress. And some of the people who rose, like Kiewit from small beginnings, nobody thought of as the great glories of that early time. And I think that's kind of the way life is. It's hard to get anywhere near the top, and it's hard to hold any position once you've attained it. And but I think you could predict that Kiewit was likely to win. They cared more about doing it right. They cared more about avoiding trouble. They put more discipline on themselves.
Well, if you knew the individual well, you would have bet, right?
Well, the man that's recommending this is named Munger. Anyway, no, I don't think it's that. But I was just automatically doing that. What was working? What was failing? Why was it working? Why was it failing? If you have that temperament, you are gradually going to learn. And if you don't have that temperament, I can't help you.
If you'd followed Pete Kiewit around for 10 years, you never would have seen him do anything dumb, right?
Oh, yeah. And so
it's avoiding the dumb thing. You really don't have to be brilliant, but you have to avoid just the sort of what almost seem the obvious mistakes. Charlie, I think when he practiced law, any client that came in, Charlie was thinking about that business as if he owned the place. And he probably generally felt he knew more about the place than the guy that actually owned it, who was his client, who was the client. But I remember talking to him, 50 years ago, and he would start talking about Caterpillar dealerships in Bakersfield or something of the sort. He was incapable of looking at a business without thinking about the fundamental economics of it. There's two ways of looking at it. If you talk about the capital necessary to run the business, as opposed to what we might have paid for the business. I mean, if we buy a wonderful business, you could run the Coca-Cola company, assuming you had the bottling system separate. You could run it with no capital. Now, if you buy it for $100 billion, I mean, you can look at that as your capital, or you can look at the basic capital. When we look at what's a good business, we're defining it in terms of the capital actually needed in the business. Whether it's a good investment for us depends on how much we pay for that in the end. And particularly people make a lot of money. But there are a lot of great businesses that need very, very little capital. Apple doesn't need that much capital. The best ones, of course, are the ones that get very large while needing no capital. See's is a wonderful business, needs very little capital, but we can't get people eating 10 pounds of boxed chocolates every day.
Except here.
We want to.